Hey
Guys,
guys,
welcome back to the channel.
welcome back.
Today is a rainy day, so we decided to just keep it
It's a warm,
simple.
cozy day, but guy wants to wear shirt and cargo pants. We're in this a pajama day.
My pajamas not appropriate for YouTube, okay? Right?
Mhm.
So it's just a nice rainy day. We're home, we're chilling, and today we want to talk about. So we're talking about today, baby.
You tell me. You're the boss.
So today we want to talk about financial stewardship in marriage, which is the second part in our marriage. Let's Stop Marriage series. So I hope this video is gonna bless you guys and stick around.
Hey there, I'm Shemaine.
And I'm Rashad.
And we're the Prospers.
One of the first points we want to talk about is understanding each other's financial habits, or how does each person in the
View money.
each person in the relationship view money. When we were doing marriage counseling, we had a very interesting session on finances, and they were saying that if in one family $20 is seen as pocket change or money to spend quickly, but in the other family $20 is seen as something that needs to be spread across the entire month so that it can last, it causes conflict in relationship.
It can cause conflict.
It can cause conflict in a relationship. So,
and it's not only that, you have to look at the spending habits of your person. So before you get married, you would have seen certain tendencies of your spouse, whether your spouse loves to splurge, whether your spouse is very frugal, your spouse is a miser. So you would pick up on these.
Stingy, if you want to use all these nice words.
Or even stingy. So you will pick up on these different things in the courting and dating scene, and then that's when you have a discussion about money. And a lot of couples would like to talk about money.
So baby,
it's a source of conflict.
That's true. So baby, let's examine our marriage. In our marriage, how do you see money, or how did you grow up seeing money?
I grew up seeing money as something to be saved for a rainy day, and whatever little that you have to spend, you make it last for as long, right? So from the age of, and it was in second form when I asked my parents to open my bank account for me at the Bank of St. Vincent, National Bank of St. Vincent. So from that time, I started saving. Whenever, I got Christmas money, you get $100 for Christmas, I put it all in the bank.
$100 for Christmas.
Right? That's all you got for the year. Right? So you put it in the bank. And even this saving habit even started in primary school, going further back, where we had the penny savers. We call it the bank book. So every Wednesday, you would go to the teacher who's in charge of the bank book. It is, the head of it is, I think, was the penny bank in that day. Right? And it was in each of the primary schools.
For those of you who don't know what a penny bank is, it's kind of sort of like a credit union, but it's
It's somewhat like a credit union. So you would go every lunchtime on a Wednesday and you put whatever money you want to put. So some parents would have given their children $5 every Wednesday. Put that on your bank book, put that on your bank book. And at the end of primary school, which is at 6th grade, they give you back your money. So parents would use that money to purchase stuff to go into secondary school for their children. So that's how I started saving in primary school, and I grew up with that mentality as well. And even at home, it was always instilled in us: save for a rainy day, save as much as you can. And another thing is that they told us that you save with a purpose. So for example, I wanted a laptop. We had a desktop at home, but my parents were very strict, and you did not have free access to this desktop. There was a password, and you'd only go on it just to do homework. On weekends, if you want to chat, use MSN, you only have an hour, and it has to be a supervised hour.
That's a tough one. That's a tough
one. So going through secondary school, when you had to do your projects and so on, it had to be on the desktop. And my daddy would be up and down walking, ensuring that the MSN tab is not open yet. And then, "Sure, what you doing there? I thought it's what you doing there." So I really wanted a laptop. And my dad, he said he's not buying any laptop for any child. When you start working, you would buy your own laptop. So when I started working, I saved towards that. And money that I was saving in the bank, I used it towards buying my first laptop. That's what I went to Cuba with. So I purchased my first laptop from that savings. So that's how I view money. And I still view money that way, as something to be saved for a rainy day.
So I grew up somewhat different to Shemaine. Oh my gosh. So the way that I grew up, I always thought that if you have $20, a portion of that $20 is to be saved, and a portion of that $20 is to be spent on things that you want to get. So I enjoyed growing up with nice things. I'll not lie to say. My parents did instill in us the value of saving, but they also instilled in us the value of, getting the stuff that you want to get first. If there's something that you like and you can afford it, then you get it. If there's something that you like, so for example, if there's $20, $10 is strict savings, $5 is like savings for stuff that you want to get, and then the $5 is just like money to splurge. Shimin will go out and she'll be like, well, let me get something cheap. I'll be like, let me go out and let me get something good.
Expensive. Good equals expensive.
Not necessarily.
So the thing is, right, when you have identified and you have had that hard discussion as to how each other views money and your perspective on money, then you have to sit down and now come to the, we have to have that round table talk as to how are we going to manage these different habits? How are we going to deal with these different habits? Are we going to continue spending the way that the spouse who likes to spend is spending? Or are we just going to continue to save as that spouse who likes to save? Or are we going to meet in the middle? It's okay to spend on the things you like, but at the same time, you have to save, right? So you have to meet at a common ground, and these are discussions that you have to
Interesting
have.
that you say that, because I feel like it's important to save, but it's also important to spend money on the things you like. But you're like, it's important to spend money on things you like.
I didn't say it in that order
No,
because
I know you said it in the order that you like. It just shows how we view money.
Point number 2 is budgeting together.
Oof, that's a good topic.
Yep. So I think from this you have to look at it from different angles. One, if you guys got married and started life together, or when you guys got married, both of you had separate lives, meaning you had your own debt, you had your own savings and everything like that. So for us, we started life from scratch, from ground zero.
Yeah.
So we knew, we had a vision as to what we wanted in life, what we wanted to achieve, and how much income we were earning together. And then we would know what to spend there, what to save, what was most important, and we gave certain things priority.
So I also do think that because we did not have the individual lives of earning money, it was easy for us to say, okay, let's just put most of our money in a joint account. So we are of the belief that we have a joint account for long-term goals. So for example, if we want to have a mortgage, we want to mortgage
or build a house,
buy land, same thing. If we want to do like this grand family vacation or something, like when I say grand, like 5-6 years down the line, we have a long-term savings account for that, a long-term joint savings for that. We also have joint short-term savings. So the joint short-term is stuff like groceries, bills, rent. These are the things that we...
Immediate emergency in case anything comes up.
So this is money that both of us have absolute access to, no matter what. Because I don't believe in having your emergency fund put somewhere where another partner can't access it in times of an emergency. The short-term goals, if she may decide she wants to pay the rent this month, that's completely up to her. If I decide I want to pay the bills this month, that's completely up to me. The money is just there. Then we also believe in personal accounts as well. So we both have personal accounts.
So that's how we deal with that situation of him buying his expensive stuff, right? So you each have your personal accounts where you put how much you want in that account. You work for your money and you spend your money how you want. When it's done, it's done.
Well, it's not that you put how much you want. We've actually sat down and discussed how much money we will be putting in. So there's always complete transparency. I know how much Shimin makes. Shimin knows how much I make. We know how much we spend. We know how much we spend in tax. Every month we put our income into this spreadsheet with tax, tithe, income, and all the expenses that we have, and even personal savings. So I know how much she puts into her personal account. She knows how much I put into my personal account, and it helps us in terms of transparency. Now, if she decides she wants to go work extra hours and make extra money, whatever she does with that money, that's completely up to her. So, but we've already established it. If we get $100,000 for the month, then we're gonna be
rich. If only, right?
We're gonna be putting a significant portion of that into joint accounts, short-term, long-term, and then we have a certain amount that goes towards spending after tithe is taken out.
That's what I wanted to mention as well. One of the first things that we do when we get our salary is that we tithe. We tithe on our gross.
So
and my tax is so much, so sometimes it hurt my heart.
So it's such an interesting topic because I was talking to someone and they're like, I tax on my net. And then I was like, you do realize when you tax on your net, that's after you get your gross.
That's basically robbing God. That's how I feel.
And then it goes to, so let's say you have a mortgage. You get the money, you've paid your mortgage, you've paid your car, you've paid your debt. And then the rest of that is what is left, and you're going to tithe off that.
And you're giving God what is from what is left?
From what is left.
But God we can't do God
everything.
that.
Now, the tithing on net versus gross thing, that's honestly a personal conviction thing, but we have just decided to tithe on our gross. Initially, we used to tithe on our net too.
But then we were convicted.
We had a conversation with somebody and they just kind of really explained some stuff to us. And I was like, never really.
Because God gave us the capacity, He gave us the strength to work for the entire month, and He gave us that lump sum of money, our salary. Why not take from that to give back to Him?
Exactly.
You know, so it's just a form of gratitude. You know, God, we thank you. Yes, yes, tithing on the gross it hurts the pocket and your heart a little, but it's not worth, you know, my relationship with God at the end of the day.
And like somebody once, so I was watching a video and the guy said that everything that is given to us is from God. Every single thing. And although it may seem hard to give God 10%, we still have 90%, but 2, they were saying that the way that you give with a cheerful heart is by knowing that God also gave you things that are beyond monetary value. So you wake up every day, you have the breath of life, you have a beautiful wife who's next to you, you have a beautiful baby girl, you have family that loves you, you have 2 feet, you have the ability to go to work on a rainy day, you have the ability to have a job. These things are not financially quantifiable. But when we give God our 10%, we say, God, I thank you for even the things that are worth more to me than money. Also in terms of the budgeting aspect. So we give the general layout of how we do things, but it's not specifically tuned like that. For example, we share about 7 bank accounts in one bank, plus we have accounts in other banks, but they serve the purpose of either long-term savings, short-term savings, or individual savings.
So we budget to a T. So I know a lot of persons, they will just go to the supermarkets and spend how much they want for the month. But we budget how much we would like to spend for groceries. We budget how much we would like to spend for gas, for car expenses, and so on. So we know, so one account is just for groceries, one account is for the gas, one account is for this, so that we know exactly where the money is and where to take it from when we need it.
So a lot of the times people have told me, why you have so many bank accounts in the bank? Why you have so many bank accounts in the bank? And I was telling them, it's interesting if you put all your money into, let's say you have $1,000, you put $1,000 into this account and you budget $200 for groceries, $200 for gas, $200 for rent. What happens if after you paid your $200 for rent, you have $800 left? You have $200 for groceries, but you spend $13.72. And then on gas now you spend $14.25. And so then when it's not an even number, it kind of starts to confuse the math because you have to keep track of what is there, what isn't there. So sometimes we find ourselves rounding up. I spend $13.75, I'll consider that $14. I spend $14, I'll consider that $15. But then now you're now adding uneven. So when it comes time for gas, whoever goes to put gas in the vehicle, they just transfer the money from the gas account, put it on their personal account so that they can pay for it, and then transfer the remainder back.
And the thing is, do what works best for you guys. This is what works for us. But I know persons use the envelope method where they withdraw the money and they have them in different envelopes. Or there's this new folder system that they use to save money and so on. So just do what works best for you in terms of budgeting. But it is important to budget because one, we are stewards. God gave us these things and we have to learn to manage it well so that we can honor Him. And He doesn't want us wasting, you know, what He has given to us. So this is one of the ways in which we can be good stewards of what God has given to us, our finances.
So I think the reason that I personally don't like the envelope method is, what do you do with the coins? I've noticed that when you have coins and you just kind of throw them on the side or throw them in a jar, when you come to count these coins at the end of the year, these coins happen to add up to a lot of money.
Yeah.
And I don't want the money to just be, it's nice to have money that you didn't budget for, just lying around the house. But I kind of want to know exactly how much we're spending on this, exactly how much we're spending on that. And by having them in the accounts, we can say, okay, we did not spend that much money in gas this month. Maybe we're budgeting too much money for gas.
Yeah.
Or we did not spend as much in groceries, or we spent too much in groceries. So let's either cut down on what we do for groceries for the month, or allocate money to put into groceries. So that's one of the ways that we do it. And like Shemaine said, it's up to you guys how you want to do it. But I definitely do agree, and we definitely do encourage couples having joint accounts and personal accounts. Now, in terms of those that were married before,
not married before.
Sorry, in terms of those who were working before they got married and had their own individual lifestyle going on, we don't have much experience in that aspect. However,
You can talk to your partner.
However, the same advice applies. Work towards getting at least a joint account. However you guys decide to split it is completely up to you, but joint and personal, as a married couple, you should have a joint account. You married this person, you trust this person.
And there should be financial transparency. It's not a form of control, so that you will know where the money is going together. You know?
So it's nice that, I mean, there's some couples where the one partner goes to the partner and asks the other partner for money because they know you have...
Or they trust them with the finances.
You have $50,000 in the bank, babe, can I get $1,000 to go to this? And that's fine. It's just in our relationship, we just know where the money is. So there's no need for us to go ask. And in terms of who does all the budgeting and stuff in the relationship, it is actually me. It's actually me.
And I just help him along the way if he needs help.
Big surprise, because if
when I realize that he's spending too much, and I would come in and say, babe, no, we can't be spending that much. So I'm the supervisor.
If Shemaine was the one in charge of budgeting, we would never pay bills, we'd never buy groceries. The money would just stay there.
That is not true.
That's how it is. Let's move on to our next point.
So in moving on to our next point, saving and investment.
Savings and investment, okay.
It is important to save. And it's important to save with a purpose.
Yes.
When you don't save with a purpose, the money just stays there, or you just use it mindlessly.
So one of the things that I will encourage is long-term savings should be placed in an account that is
not easily accessible.
Not easily accessible, yes. I was going to say difficult to access, but you don't want something difficult to access. You want something that's not easy to access. So when it comes to, for example, we have our long-term savings in the credit union, in shares in the credit union. So when it comes to accessing that money, it's not as easy as just going to an ATM and just plugging in a card. We'd actually have to go on the line or send a message or stand up with the book. So it's money that is accessible, but it requires a few extra steps. In terms of investment as well, in terms of, but
the Bible says that a wise man leaves an inheritance for his children and his children's children. We'll place the scripture on the screen, but I think the Bible speaks about it. I know that there are a lot of, senior persons or adults that are older than us that don't believe in leaving an inheritance. They believe, I worked to get what I have, and so my children, I don't want them to be dependent on me. They must work as well, as hard as I did, to get what they need. So they would not leave anything for their children or leave little for their children. I don't believe in that. We work hard to make things a little easier for the generation to come, right? And it would only be wise for us to leave something for them. We don't know what's going to happen when we're gone, how hard things are going to get. So we need to know that if anything happens, that they would be taken care of. So that's where we think life insurance and health insurance comes in, and that is so important. A lot of persons don't see the value of these things because they think that it's a thief-in money mechanism. But it's a way of investing in your children, in your spouse to come. Death has been knocking on doors so frequently, and it's no respect of persons. And you want to know that, God forbid, that I die, that Rashad and Azzy, and if we have another child by then, they would be taken care of. Yes, your child will be able to take care of himself, but it would be to make things easier for them, and that's where life insurance comes in. So speak to an agent, get all your information, and please get life insurance and medical insurance. Healthcare is so expensive, super expensive, and having medical insurance will help to offset that cost for you. There are some insurance companies that would pay up to 80% of the expenses. So shop around, do your research, and invest in good health insurance and life insurance. There are some life insurance policies where if you have loans, like you take out a vehicle loan or a house loan or a land loan, if you die and that's not paid off, then your policy pays that off for you and your family gets the rest. So they get a paid off house and they plus get some cash.
I think when it comes to life insurance, the issue that a lot of people have is that life insurance is the money is only accessible upon your death. So a lot of people have this mentality that if I cannot use this money, what's the point of spending the money? But I do believe that it is the first step in building generational wealth.
Yeah.
You want to know that, like Shumin said, if anything were to happen to me or to Shumin or to our family, the lost income potential would continue to be provided to our family.
Yeah.
Then it comes down to the whole. Then there's the whole life versus term versus whole life insurance. Like Shumin said, sit down with your agent, figure out which one is better for you. So it's important for life insurance, health insurance. A lot of the times people think that these things are a waste of money, but I've seen people spend so much money on healthcare. I've seen people, after they die, they have no money to leave for their kids. I know people who don't believe in generational inheritances for their family.
Yeah.
They believe that I've put my kids through school. I was a farmer, bus driver. I was a simple person in life. I put my kids through school to become a lawyer, a doctor, an engineer. My kids are making 10 times the amount of money that I made when I was younger. So I'm not leaving anything for my kids.
Yeah.
I need to buy my brand new truck. I need to build my house on the hill with a pool and a helicopter pad. And then when I'm done, I'm done. But I do believe that it's wise. It shows good financial wisdom. And even if you don't leave the inheritance for your children because your children are well off, you say, okay, I want to leave this for my grandchild. So hopefully by the time that I'm getting ready to leave this earth, my grandchild would have probably just finished school or just started working, and this inheritance would go really, really well for them. If you're not too sure how you want to leave your money, there's also the idea of a trust fund, which we recently found out. The trust fund allows for your money to be divided how you want it to be divided after you die. It's not just I die and my heir gets everything. So there's so many different financial things that we were not taught in school. Getting married, it becomes something to maneuver.
Trust me, and nobody prepares you.
Yeah.
You can prepare as much as you want for it, but when the reality steps in, that's a different thing. Adulting is a lot of work, and I wish that they taught us these different things in school. No, not just in school. I think it's our parents' responsibility as well to teach us these things. Another thing is that we have to actively save for our children. We see the state of the economy. Things are getting hard. And one thing that we did was to open a Calabash account at, what's it called? Jano. So that's where you put a certain amount of money determined by yourself each month. And when the child turns 18, they can either get that money or they can use it to open an account with Jano. That's a form of saving. So that way, some people use this so that to ensure that their child gets at least their first degree paid off. So that money that they were saving at Calabash throughout their lifetime until they're 18, they take that.
Which does have a high interest rate.
So they can use that money to pay for their first degree, because not all of us, get scholarships and so on. So it's a form of saving as well. So you have to think futuristically. It's not just thinking about now. Yeah.
Now it's interesting that Shumin mentioned that, because the next point actually talks about financial literacy.
Before we go there as well, one thing that we've been realizing is that your monthly salary, because things are increasing, is not cutting it. The price of food, goods and services, they're increasing, and then the salary is not increasing. So sometimes by the time you pay off all your bills, take care of all your finances, you don't have much money left for the rest of the month. And that's where,
that's where our next sponsor comes in.
Thinking of alternate sources of income to help out is super, super important in this day and age. So I don't think people see it as you loving money and so on. No, it's you being wise. You're realizing that, okay, the salary is not enough and we need a little bit more to take care of ourselves. Or you want to live a certain lifestyle, then you have to put in the work.
So another thing that kind of really helps is financial literacy and education. A lot of the things that we're speaking about now, we did not know them 3, 4 years ago, we did not know them.
Had we known, we would have been in a better place financially.
So much so. So I'll give an example. So when Shimmy and I just got married, we stumbled upon Dave Ramsey. Now, Dave Ramsey is a financial advisor. He's based in the States, so a lot of the things that he speaks about, they may not necessarily apply exactly for us, but there are a lot of things that he speaks about that are just universal across the board. He speaks about saving an emergency fund. That's baby step number 1, and then baby step number 2 is to start tackling debt. Initially, I had this misunderstanding that if you get a car through the bank, you have to own the car first before you can sell the car. So when Shamin and I just got married and we started working, our very first car, the bank was offering us 6 years to pay off that car at a very comfortable payment. But I did not understand that's what it meant. I was like, no, because we didn't plan on keeping the car for long. So I was like, we'll try to sell the car, hopefully within the next couple of years after it served us a significant purpose. So I was like, no, we want to pay off the car as quickly as possible. Can we pay off the car in 2 years? So just imagine the difference in the payments that we would have been making had we taken the car to pay it off in 6 years versus paying the car off in 2 years.
Yeah.
And Paul does speak about knowing what it is to have a lot, knowing what it is to have a little. And a lot of people, they would look at us and be like, oh, you guys are doctors and blah, blah, blah. But people did not know that between the car and the rent, we used to be struggling. Times we used to open the fridge and there was nothing in the fridge. There were times we had no gas in the car. Like, we had bitten off a little bit more than we could chew because we had made a bad financial decision because of poor financial literacy.
Yeah.
And it was a rough time. That was a time that I was depressed. I mean, it really, she wasn't able to really connect with me because I felt like as a man, I've taken Shamin from her father's house, I married her, I brought her here to kind of struggle. And we went through a rough time during that period of time. I don't know if you want to talk about it.
That's fine. You spoke about it already.
So that was a very poor financial decision. As time went by, we started understanding a little bit more. We started reading a little bit more, watching more videos, and we started understanding.
And speaking to people, yeah.
And the people were just blowing our minds, and they're like, Rashad, you don't have to wait to own the car to sell the car. And we went on Facebook Marketplace and we sold the car. And
you paid off the rest of the loan of us left, and then you bought something a bit cheaper.
Yeah.
And we had some, it caused us to have some savings as well.
Yeah, because we had put so much money into it that by the time we had sold it, we were able to pay it off and have that chunk of money. But
that can be a business idea, buying and selling cars.
There's so many people doing buying and selling cars, but we definitely agree.
People always looking for vehicles. That's the thing.
That's true, and there's so many people selling vehicles, honestly. But I mean, that's one way to look at it. So as we began to start learning more about financial literacy, we started understanding the importance of life insurance, the importance of health insurance, the importance of savings in a credit union. Then we started realizing that there was a way that we could break down our taxes, and then
taxes are a whole nother issue.
But it's like the more you speak with people, the more you understand that there are different things you can do. So by putting money into the credit union, by buying shares, that kind of helps. And there were so many different things that we were not doing at the time. And as we spoke to more people, we kind of got an understanding of how to do. I definitely encourage you guys, find a good Christian couple, find a good Christian financial advisor. Just find people who know what it is that they're talking about, people who are experts in their field.
There's also Priscilla Charles.
Oh, yes. Yeah.
Yes, Priscilla Charles. She's a very good finance. She's worked throughout the Caribbean with the Eastern Caribbean Central Bank and so on. So she has a lot of information on investment vehicles as well, the mutual funds and the stocks and so on. So speak to these persons or reach out to us. You can give you their numbers and so on. If you have any advice, you need any advice.
Big ups to you and to Priscilla.
Different ways in which you save as well, drop them below in the comments. We want to hear from you, and it was just nice sitting on the couch and chatting with you guys about finances. So guys, drop us your comments below, like, comment, subscribe, share the video with other married couples or those who are thinking about getting married, and we want to hear from you. We love you. And remember, in everything, in all this financial planning and everything, you have to seek God's face and to put God first.
All right, guys, have a blessed and wonderful day.
Bye-bye.